Key to this is the recent completion of the National Debt Exchange, as well as the potential of a new IMF agreement at the end of this month. The transformation will no doubt present a challenging market environment for the securities and investment industry, which we're a part of. However, as we have seen over the past few years and through other crises, there have always been opportunities found in difficult times. The key to making the most of these opportunities is to build on our strengths. For Scotia Investments, those strengths are represented by a solid balance sheet, an extremely sound business model, and a supporting client base. And this is all supported by talented team members. A number of them I had introduced earlier. I'd also like to introduce Marva Senior. Didn't see her earlier, right? She's also a senior manager within our Montego Bay branch. I would like to start out with a brief review of the Jamaican economy over the last year, which really provided a backdrop for our performance. As you all well know, there have been considerable uncertainty over the year regarding the signing of a new IMF agreement in the local market. This really wasn't helped by the challenges of the weakening global growth and volatile market conditions coming out of the European debt crisis. Weakness in our general consumption tax, which represents approximately 30% of our tax revenues, underlined or really highlighted the contraction in our economic growth and weak employment level. In relation to the financial markets, we saw an increase in treasury bill yields, which again is an indication of some of the challenges in the economy. With regards to the external profile of the country, the net international reserve fell some 44% during the year, and that equated in some 5.3% depreciation in the local currency. The fall in the net international reserve really again highlight the urgency of a new IMF agreement to provide well-needed balance of payment support. And going forward, a confluence of factors, mainly local, but of course international, will contribute to a very challenging environment. Before I review our performance for the financial year, I want to just summarize some of the main market conditions for 2012 to give greater context to our financial performance. The results achieved this year were against the backdrop of an extremely challenging operating and competitive environment, which impacted some of our business lines. Some of the more important challenges we faced were the uncertainty, which was one of the main issues surrounding the IMF agreement, falling in our foreign reserves, a widening in our fiscal numbers, which led to increased risk aversion with regards to the government of Jamaica securities, the general increase in the tax package, the cost of living by virtue of the tax package, slow global growth, and new tax measures that impacted our business started last year. In summary, in terms of financial performance, in line with our stated objectives, net interest income for the year declined marginally by 0.2% versus the previous year. I'm especially very pleased that non-interest revenue grew by an aggressive pace of 21.5% even in this environment, again in line with our stated long-term strategy of growing other areas of our business. Operating expenses grew 8.6%, which represent a marginal increase when considered that inflation was 7.2% for the year. Net profit before tax was up 4.2% over last year, notwithstanding our decision to be extremely aggressive in reducing the reliance on net interest income. For the year, net profit was down 3.1% relative to previous year as a result of a higher effective tax rate versus the previous year, as the company held less tax-free government of Jamaica assets. I want to highlight a key metric at this stage, our capital adequacy ratio. Our capital base stood at 11 billion, puts our capital adequacy at some 36% for the period, well in excess of the 10% required by the Financial Services Commission. The level of capital buffer ensures that Scotia Investments can safely navigate through stressed market conditions while allowing us to take advantage of business opportunities. This is another strength of your company. Let's look at some of the main highlights for the year. Total funds under management saw a growth of 2.3% for the year. Net interest revenue remained mostly flat, and again, that is very much in line with our long-term strategy in reducing our balance sheet exposure or contribution to overall income. In keeping with our long-term strategy, we saw very aggressive growth in our non-interest line, 21.5%. And overall, net profit, as I mentioned before, declined marginally by 3.1%. And again, this was primarily due to a higher effective tax rate. Our shareholders' equity grew by 10.5% over the year, ending at $11.4 billion. In terms of our revenue composition, a significant achievement is the continued reduction in the reliance of net interest income. That was reduced to 68.5%, with fee and other income accounted for 31.5% during the year. Finally, the year's performance translated in an efficiency ratio of 33% and a return on equity of some 17%. And this is in line with our target of maintaining a productivity ratio below 35% and our return on equity between 17 and 20%. I want to now move and speak about the strengths of our business model in terms of our off-balance sheet focus and the progress that we have made. As shown in this slide, in terms of assets under management, our off-balance sheet business grew by 4% and accounts now for 57% of our total funds under management. This is up from 39% in 2008. And again, this is very much in keeping with our strategy. The quality of the funds under management have a direct impact on the quality of the revenues by delivering better risk-adjusted returns. For the year, as mentioned before, non-interest revenue accounted for 31.5%, up versus the 27% for the previous years. All four business pillars within Scotia Investments contributed to our off-balance sheet thrust. Our asset management business, our trading business, our capital markets business, and our retail brokerage distribution business. I want to take this opportunity to highlight some of the major achievements and milestones for the various business lines. In terms of funds under management or fund management business, Scotia Asset Management, which is a subsidiary of Scotia Investments, continues to perform well despite the challenges in the market. Last year, we had reported that we had launched arguably what is the only true money market fund in this country, the Scotia Premium Money Market Fund. And we are extremely excited to say that by the end of year one, the size of the fund grew to $1.4 billion. And as I speak now, it is in the region of about $2.2 billion. Finally, we successfully migrated all our unit trust funds to a single international mutual funds platform to improve the efficiency in delivering service to our customers. All in all, it was a relatively good year for that business line. Moving now to our trading business. Our trading team overcame some of those challenges and recorded revenue growth of some 10% to $449 million during the year. In particular, the unit traded in excess of 4.4 billion Jamaican dollars in non-governmental Jamaica assets. Our capital markets business, we'd call it the new kid on the block, which was recently launched, has done relatively well. During the year, the unit was able to successfully close in excess of $500 million deals in transaction. The transactions closed included a wide cross-section of fundraising activities. There were a couple syndicated loans, local notes, and structured finance. We want to highlight some of the main achievements or deals done during the course of the year. There's a FACE transaction, HUE transaction, Megamart, Jamaica Producers, the Government of Jamaica, and the National Water Commission. I am very happy to say that we have started a new financial year with a decent pipeline, and now we account for an estimated 40 to 45% market share in this business. Our team of investment advisors and the various support units have done a fantastic job over the year, and last year is really no exception. I would like to say that Scotia Investments has some of the most knowledgeable people in the industry who stand ready to serve our clients. The team continues to innovate and execute a number of strategic initiatives to improve the value we offer to our clients. Scotia Investments has an advisory approach to client interaction, And this approach requires a strong focus on training and development of our team members. I want to round off this section just to speak briefly about the importance your company places on giving back to society. We are part of the fabric of the Jamaican society, and highlight here in the slide, you can see that our focus has mainly been on youth and community development. And I'm very happy about the work that we did last year and commit to continue working in this area. Just yesterday, we had released our first quarter results, and I'm pleased to report that we had a satisfactory first quarter. Our performance is on plan and beat plan in many respects. Net interest income grew by 11% over the corresponding quarter last year, and non-interest revenues grew an encouraging 10%. Operating expenses was up 27% quarter over quarter, but this was primarily associated with the ongoing expenses with regards to our system conversion project, as well as increasing taxes, the asset tax that I spoke about earlier that was implemented last year. Profit before taxes was up 2% versus last year. I would like to, in closing out my presentation today, speak about some of our broad strategies, the framework that pretty much governs the way we operate. Our strategy really hasn't changed, but it has been refined and updated with our view as the future becomes clear over time. You would have seen most of what we have last year, except that we have kind of streamlined the initiatives into 4 main areas. 1, customer intimacy. We strongly believe that customers are actually at the heart of every single thing we do, and we are striving to better understand their needs and providing them with the relevant solutions. High performance culture. Our continued strategy to align employee objectives and business processes with our business strategy, focusing on developing, recruiting, retaining top talent, reevaluating compensation, rewards, and recognition practices, building our leadership strengths, and ensuring employees enjoy a very good work-life balance. Operational efficiency, an ongoing process, the greater utilization of technology and the streamlining of processes to ensure that the initiatives of the company continues to improve around service delivery and cost reduction. And critically, sustainable profit growth. Just to say, your company is dedicated and focused on building out our revenue streams with a strong focus on non-interest revenues, and we want to continue to diversify our business. To succeed under any circumstances, but especially in these challenging times within our country, our company must stay focused on 2 key success factors in the coming financial year: our customers and, importantly, our employees. I am very confident that we have put together the ingredients needed for success. Ladies and gentlemen, at the heart of your company's strength is our straightforward, sustainable, proven business model that benefits customers, shareholders, and has stood the test of time. While some economic and regulatory challenges are on the horizon, your company is well positioned to succeed in this evolving environment. Your company's capital strength will provide us with the flexibility to pursue growth strategy, while your company business model will keep us strong going forward. Your company is anchored in the diversification for long-term strength and short-term flexibility, providing us with the right business mix to balance stability and growth. As we look forward towards the new year, I want to recognize the continued support and guidance of the Board of Directors, all of whom have contributed to the success of this organization. Like Mr. Boyne, I would like to express thank you to our former chairman, Mr. Stephen Vassiani, for his exceptional guidance he provided during his tenure. To our valued clients, continue to provide us with exceptional support, and our exceptional team members continue to be the one of the organization's best talent. To you, our shareholders, thank you for your continued support and confidence in this organization. The Scotia Investment Team will continue to work to ensure that your company remains the premier financial institution where clients' expectations are exceeded and shareholders' value increased. Thank you.
Thank you, Lassane. The director's report has been circulated to the members, and at this point, can I have a motion that the director's report be taken as read? Vanessa? And Andrea seconded. All in favor? Any opposed? I declare the motion carried. The audited accounts for the year ending October 31st, 2012, and the reports of the directors and auditors have been circulated to the members. I will now ask Mr. Linroy Marshall of KPMG to read the auditor's report.
Thank you, Mr. Chairman. Good afternoon, everyone. The auditor's report is set out on page 69 of the books. This is the independent auditor's report to the members of Scotia Investments Jamaica Limited. We have audited the financial statements of Scotia Investments Jamaica Limited, hereafter the company, and the consolidated financial statements of the company and its subsidiaries, hereafter the group, set out on pages 71 to 154, which comprise the group's and the company's statements of financial position as at October 31, 2012, the group's and the company's statements of revenue and expenses, comprehensive income, changes in equity and cash flows for the year then ended, and notes comprising a summary of significant accounting policies and other explanatory information. Management is responsible for the preparation of financial statements that give a true and fair view in accordance with international financial reporting standards and the Jamaican Companies Act, and for such internal controls as management determines are necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error. Our responsibility is to express an opinion on the financial statements based on our audit. We conducted our audit in accordance with international standards on auditing. Those standards require that we comply with ethical requirements and plan and perform the audit to obtain reasonable assurance as to whether or not the financial statements are free from material misstatement. An audit involves performing procedures to obtain audit evidence relating to the amounts and disclosures in the financial statements. The procedures selected depend on our judgment, including our assessment of the risks of material misstatement of the financial statements, whether due to fraud or error. In making those risk assessments, we consider internal controls relevant to the entity's preparation of financial statements that give a true and fair view in order to design procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the entity's internal control. An audit also includes evaluating the appropriateness of accounting policies used and the reasonableness of accounting estimates made by management, as well as evaluating the overall presentation of the financial statements. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our audit opinion. In our opinion, the financial statements give a true and fair view of the financial position of Scotia Investments Jamaica Limited as at October 31, 2012, and of its financial performance, changes in equity, and cash flows for the year then ended, in accordance with international financial reporting standards and the Jamaican Companies Act. We have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been maintained so far as appears from our examination of those records, and the financial statements, which are in agreement therewith, give the information required by the Jamaican Companies Act in the manner required. The report is signed by KPMG at Kingston, dated November 27, 2012. Mr. Chairman.
The next issue is our re-election of directors. In accordance with Article 100B of the company's Articles of Incorporation, directors Barbara Alexander, Bruce Bowen, Anthony Chang, Angela Fowler, Anna Law, Philip Martin, Lysant Mitchell, Kathy Welling, Marcel Schroeder, and Jeffrey Hall all retire from office. Pursuant to Article 100C of the Articles of Incorporation, the directors recommended by the Board of Directors of the company for re-election or election are Barbara Alexander, Bruce Bowen, Anthony Chang, Angela Fowler, Anna Law, Philip Martin, Lysant Mitchell, Kathy Welling, Marcel Schroeder, and Jeffrey Hall. It is being proposed that directors recommended for re-election be elected by a single resolution. May we please have a motion that the recommended directors be elected by a single resolution? Andrea moves. Vanessa seconded. All in favor? Any opposed? The motion is carried unanimously. I now ask for the moving of a motion pursuant to Article 100C that Barbara Alexander, Bruce Bowen, Anthony Chang, Angela Fowler, Anna Law, Lysant Mitchell, Philip Martin, Kathy Welling, Marcel Schroeder, and Jeffrey Hall, all retiring in accordance with Article 100B of the company's Articles of Incorporation, be elected as directors of the company. May I have a motion? Andrea, and seconded by Mr. Hutchinson. Thank you very much. All in favor? Any opposed? The motion is carried. I would like to express our appreciation to all members of staff for their loyalty and hard work over the past year. We are confident that with your continued dedication, Scotia Investments Jamaica will continue to perform well, and we'd certainly, on behalf of the board, would like to thank all of the staff of the company.